Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Earlier today, Chinese tech stocks were up, some up 5, 10, even over 20% in one day. A lot of folks are pumped, and they're asking themselves, man, I've suffered through a lot of pain owning some of these Chinese tech stocks, or some folks are just starting to get right into it, and they're saying, wait a second, was that the bottom? And while no one can know exactly if and when that the most recent price action was a bottom, it is worthwhile to consider what are sort of the dynamics going into it, both a pro and against argument that the recent price could potentially be a bottom. I'm not saying it is. I can't predict what's going to happen in the short term. I think anything really can happen that drives short-term prices. I'm generally focused more long-term, trying to look out several years, think about what could this company look like in a few years from now. Regular viewers know I've talked about Alibaba as a potential multi-bagger, and I like the valuation setup. You can see the videos where I talk about that. And even Cathie Wood and her ARK funds are starting to buy back into some of the Chinese tech stocks that she was talking about negatively just a few weeks ago, effectively saying, hey, valuations reset, you can't own these things. So let's dive into sort of because so many folks were asking, let's dive into could this have been the bottom? What are sort of the pros and cons against that argument as we look into it? So first, as we consider it, the journey for many multi-bagger type stocks is that you have huge drawdowns that you have to suffer through, and that's just part of what goes on with these companies. For example, Alibaba's down about 50% from its high just a few months ago. And if you were to break it out into understanding actually what's driving that, the reality is the vast majority of this is actually valuation compression, given the fact that the valuation, if you're looking on a price to sales multiple, has come down 85% since 2015. It's come down nearly 70% from 2020 when you look at it on a price to sales basis. Now this might not be exactly an apples to apples basis, because what you're looking at is Alibaba's business is slowly transforming over time, with less of their super high profit margin business effectively as an e-commerce platform, and much more revenue coming in terms of lower margin. So it's not purely an apples to apples clean way to think about it, but it does sort of reflect how the fundamentals of Alibaba, the company, continues to grow, along with many of these Chinese tech stocks. Unrivaled Investing Journey subscribers know I talk about a few others that I view as part of my core 25% bet on these Chinese tech companies and why I like them, and looking at the fundamentals. And when you're looking at these companies grow and you see that valuation compression, you say, well, wait a second, there's only three things that drive stocks over time. There's the valuation, and that valuation multiple will swing a lot in any given year. Then there's the fundamentals, like the sales and the earnings of the business. And then the third component that drives potential returns is effectively distributions or dividends or cash return to shareholders or a spin-off of an asset. And so you're looking at those three different things, and I'm looking at the biggest component driving the negative returns for a lot of these Chinese tech stocks over the last few months is that first component, that valuation, where effectively that's the psychology, that's the instant Rorschach test of what do investors think about it. They're saying this is worth 70% less from a valuation perspective than it was just a few months ago. And so, that is worth considering. So you do have a period of 70%, contracting valuation, from 11 times sales to 3.7 times sales. Huge valuation compression. And this is the point that I was making, just a second ago. In any given year, what's going to drive your return, in the multiple, the valuation, that's what they mean by multiple, that's nearly the majority. That's the biggest component. Whereas if you look out over longer time periods, 5 to 10 years, it's really the revenue growth and the free cash flow, the profitability of the business. That's really what's going to drive your longer term returns. And that's the reason why this channel, I try to have a no hype focus, trying to find what are the fundamentals of this business, what are they tapping into, what are their new initiatives that could drive that growth in the years ahead. It doesn't need to be a super precise valuation. It's a ballpark valuation framework to think, okay, what could this look like in 5 years from now? Is it higher? What's the odds that this is much higher? And thinking about that framework. And then the valuation, that's tough to say what's going to happen in any given week, month, or year. What you can bank on potentially is that what are the fundamentals, and that I would argue is generally easier to bank on than what's going to be the general psychology in any day. What's going to be that valuation? And so technically, if you were to view this also through the lens of, technical analysis, this is, generally I put technical analysis, I view it as sort of a dark arts, put it on the back burner. But technically it is appealing where you see the volume traded on Alibaba stock just dramatically increase, a high in terms of volume relative to history, and sort of a reversal. You have this sort of capitulation where the stock sold off, but then reversed during the day, suggesting that buyers were starting to step up. Maybe these are value buyers saying, you know what, around this $160 price level for the Alibaba, shares, they're sort of saying, well, wait a second, this is a compelling valuation, even with the regulatory headwinds that have become known in the last few months. And even the CCP, the Chinese Communist Party mouthpieces, are trying to reassure investors. Chinese state media outlets are trying to reassure rattled investors to maintain confidence in Chinese internet companies. Ongoing regulatory clampdown has wiped out more than $1.5 trillion from Chinese technology stocks. I mean, this is the perfect example of thinking about buy when there's blood in the streets. $1.5 trillion of effectively blood from Chinese technology stocks, getting wiped out. And, this is from the South China Morning Post. China's crackdown on big tech is a short-term cost for long-term health. So it's a question of, are they just trying to pull one on you, or do you think they're actually trying to be straightforward in terms of, what's the purpose of this regulatory clampdown? Is it to permanently, regulate these companies, these golden geese of the Chinese economy, into oblivion, or is it to sort of say, hey, what's a healthy, what are some of the healthy changes we need to make so that way, let's say you don't have just completely crazy monopolies, or, everyday workers, delivery drivers are paid a livable wage. And, you even see the ARK funds, ARKQ, recently buying back a stake that they had been selling off. So let's go against, this has been the case for the recent price action was the bottom. You've seen this huge tick up. What's sort of the case against? And I'd say the case against is that you continue to see regulatory pressure or hints of it. Even Pinduoduo just earlier today. And full disclosure, I own stock in Pinduoduo. I own stock in Alibaba. In the case of Alibaba, I own the Hong Kong shares bought through Interactive Brokers. And, here it is, Pinduoduo talking about how they've launching a new 10 billion RMB initiative with profits to support agriculture modernization and rural vitalization. China's largest agricultural platform today announced that it would launch a dedicated, platform to face and address critical needs in the agricultural sector and rural areas. Profits from the second quarter and any potential profits in future quarters would be allocated to the initiative. So this isn't saying that, hey, all future profits are going to go into it. They're just saying they put up this 10 billion RMB, and any sort of future profits until they hit it, that's where it's going to be going. So this is another corporate donation following what we saw just a few days ago with Tencent announcing a follow-on, saying effectively, hey, $15 billion in donations, to help with wealth redistribution. This is sort of, almost directly donating to whatever the CCP wants. And so I'd argue it's very possible the CCP regulatory pressure continues in some way. And, if you wake up and you see a negative headline, you could see these things maybe retest the bottom, maybe make new lows. And so that is a very legitimate risk that there's, more pressure to come. No one knows exactly when it stops. But the truth is you can get it from both sides. We're just today, you could argue there's going to be increased pressure from the United States as well. Here it is, the SEC to demand all China firms say more about investor risks, talking about how companies that are already trading in the United States are going to require additional disclosure policies. So it's not only pressure from the CCP, it's also pressure from, let's say, global capital markets sort of saying, wait a second, we've been so burned, let's say, by DD, and I've done a whole separate video on that experience, to sort of say, you need to really up your disclosures to make sure you don't have this type of situation where days after the IPO, it's down, like 50% following key regulatory problems. And, I'd say the last sort of skeptical answer to maybe the reason why a lot of these Chinese tech stocks were up is honestly, maybe they just went up with everything. A lot of folks were talking about how the meme stocks, saw a huge surge today. GameStop, AMC, up more than 30%. And, the reality is, as I look at those types of companies, I'm thinking, yeah, I don't think the fundamentals really are there relative to some of these these Chinese tech behemoths that, are posting 20, 30, 40% growth. I'm just not seeing that for legacy institutions like GameStop or AMC. So maybe that does reflect, what, this was a tide that was lifting all boats. That's a risk that, hey, if that reverses, maybe you see that also with these Chinese tech names. So the question is, what am I doing? Well, as usual, I'll do a quick plug where my name's Daniel. If this is your first time tuning in, please make a point at hitting that subscribe button. If you're already a subscriber, I do appreciate that thumbs up. If you want to follow my personal journey, go to unrivaledinvesting.com. First week of the month, I call it my full portfolio. By the end of the month, I call it a potential multi-bagger. And we also have an exclusive Discord where I'm interacting with the Unrivaled Nation on a daily basis. So what am I doing? I'm still just sitting tight. I mean, it's recognizing, look, if you're going to be investing in what you believe are potential multi-baggers, potential compounders, you got to sit through the volatility, and it's not comfortable. You're going to see things drop 50, 60. I even saw, something drop 70% in a day. So you could be down 90% on something, maybe even more. And you need to ask yourself, well, what's the fundamentals? What's going on? I'm still sitting on my basket, of Chinese stocks. It's about 25% of my portfolio. I'm going to sit tight. I'm going to read the transcripts. I'm going to follow, what are their earnings? How are they delivering? Are they taking share? Are they growing? Are they addressing core needs in the country? Do the consumers still like it? Is it possible I'm wrong? Is it possible like the regulatory pressures do regulate these companies into oblivion, or these companies get delisted and that causes short-term pressure? The delisting I'm less worried about as an investor in the Hong Kong shares. That would create a short-term pressure, I believe, but longer term it's the fundamental value of this. So I'm looking at these companies compound and saying, you know what, I'm just going to sit tight, recognizing that most of the pressure in the last few months has really come from valuation compression versus underlying fundamentals contracting. And if you're interested in following some of my other potential multi-baggers, which I save exclusively for Unrivaled Investing Journey subscribers, just this month I called out a potential multi-bagger growing 200 to 300% this year, trades at 3 to 4 times sales, is profitable, looking at continued hyper growth in the years ahead. So if you want to learn about that, go to unrivaledinvesting.com. I hope this video has been helpful for you. If it has, please make a point hitting that subscribe button, hitting that thumbs up. Thanks so much for watching.